Japanese yen rebounds, what it means for the economy. In a dramatic twist shaking the global markets, the Japanese yen has bounced back remarkably after recently hitting a 4-month low. Earlier in the trading session, the yen had weakened to 150.9 per dollar due to disappointing U.S. employment figures, triggering a slide in the greenback. However, by Friday, it had rebounded to 148.3 per dollar, marking a significant turnaround that has caught many investors by surprise. Adding another layer of complexity, U.S. President Donald Trump has actively imposed new trade measures that many find highly contentious. Following a deal that had previously reduced U.S. tariffs on Japanese goods from 25% to a lower rate, he now enforced a 15% tariff on these imports. But here's where it gets controversial. Trump didn't just stop there. He reiterated a broad 10% tariff on imports worldwide and introduced steep counter-tariffs, up to 41%, on nations that have not secured finalized trade agreements. Additionally, he put a 40% levy on goods that are transshipped through third countries. Such aggressive actions are stirring debate among policymakers and trade experts, who are now questioning the long-term implications of these protectionist policies. At the same time, the Bank of Japan took a measured approach by holding interest rates steady on Thursday, while at the same time raising its inflation forecast for the current fiscal year. For those who might be new to these economic concepts, think of it as the bank expecting prices to rise more sharply even though borrowing costs remain unchanged. This combination of caution and adjustment reflects the central bank's anticipation that the recent dip in core inflation might be only temporary, amid rising uncertainties surrounding global trade risks. These developments raise several thought-provoking questions. Are these tariff measures and currency movements a necessary correction in a volatile market? Or do they signal deeper, more disruptive trends on the horizon? Your perspective matters, and we invite you to share your thoughts on whether these aggressive policies will ultimately stabilize or destabilize international trade. To explore more detailed insights and continue reading the full analysis, please log in or create a forever free account.